To keep updated on our future projects and activities, please follow our Facebook page by scanning the QR code above or by clicking on the link that is being provided by my colleague in the chat box. Before we begin, allow us to share a video from our media partner, Business Mirror. Again, welcome everyone to the third and the final session of Pioneering the Next Wave of Sustainability, a partnership between MBC and the Boston Consulting Group. In our previous session, we had a rich discussion with BCG Managing Director Dave Sivaprasad and RCBC CEO Eugene Acevedo on how companies can organize themselves to make sustainability a core part of their business. Today, we're very excited learn more about how companies can create value while generating environmental and social impact. For the main presentation, we have Ming Teck Kong of BCG. Good morning, Ming Teck.
Morning.
Morning. Ming Teck is BCG's managing director and partner focused on utilities and green energy. He works with the private and public sector on enterprise transformation, portfolio strategy, and stakeholder engagement. He led BCG's collaboration with the World Economic Forum on sustainability and innovation in emerging markets. He currently leads BCG's people and organization practice and BCG's power and utilities practice in Southeast Asia. Ming Teck is joining us from Singapore, where he is based. Thanks very much for doing this, Ming Teck. Our discussion leader will be Eric Francia, President and CEO of ASEN. Eric, good morning.
Morning, Coco. Morning, everyone.
Good morning, Eric. Nice to see you. Under Eric's leadership, Ayala Corp established its energy platform from a standing start in 2011 to become one of the largest renewable energy platforms in Southeast Asia, with over 3,800 megawatts of attributable capacity in the Philippines, Vietnam, Indonesia, India, and Australia. The company's renewable share of capacity is 87%, among the highest in the region. In 2020, the Green Infrastructure Investment Opportunities, GIIO, report cited ASEN as the largest issuer of green bonds in the Philippines. Eric, thank you very much for joining us today. We're all really looking forward to hearing your CEO perspective on sustainability before we hear from Ming Teck. Eric, I turn it over to you.
Yes, thank you so much, Coco, Ming Teck, and good morning to everyone. Thank you to the Makati Business Club and the Boston Consulting Group for this opportunity to participate in this forum, which covers a very important and timely topic, and which is also at the very heart of our company's business. I'm quite eager to exchange insights with BCG subject matter expert, Ming Teck, to engage in the latest discussion with Coco and all of you, and also delighted to share with you ASEN's sustainability journey. The last 10 years or so, as you know, has been quite a fascinating journey of business building and transformation for ASEN with sustainability at its core. So first, as a way of background, if we can go to the next slide, ASEN, as you very well know, is the energy platform of the Ayala Group and is now one of Ayala's core businesses alongside with Ayala Land, Bank of the Philippine Islands, and Globe. We are one of the youngest businesses of Ayala, having been established 11 years ago, but we're already among the largest components of Ayala's net asset value, given AC's sizable stake at over 60%, and given ASEN's aggressive growth path since our inception. As a way of background, we established AC Energy back in 2011 from a standing start, i.e. from 0 megawatts. I personally did not have any prior experience in power, nor did any of my pioneering team members. I was a management consultant in my past life, and then joined Ayala as head of corporate strategy back then. And as a former consultant, as Ming Teck will know very well, I thought my job was done when we successfully crafted Ayala's entry strategy into power and obtained buy-in from the board. But apparently I had to execute as well, so we had no choice but to say challenge accepted. Next slide, please. Our entry strategy in power was to work with industrial partners. We effectively complemented our partners and leveraged Ayala's strong brand, balance sheet, and professional management. We initially focused on the Philippines, being Ayala's heartland, and at the time, we had no ambitions nor inkling to go international. We had wanted to focus on sustainable energy from the very beginning. Our very first investment, in fact, was a modest $12 million investment on a 50% stake in Northwind, which was a 33 megawatt wind farm, the first wind farm in the Philippines and Southeast Asia. However, we quickly realized that what the country needed at the time was reliable and affordable energy, something that renewables couldn't address at the time. So we decided to engage in thermal coal power, which also gave us a clear path to scale and profitability. And as a result, we achieved our goal of reaching 1,000 megawatts of capacity in our first 5 years. We are proud of that, attaining our initial vision. What we are not proud of, however, is that the vast majority, or 93% of our business was in thermal coal. But we saw the tide turning in 2016 upon achieving this milestone, especially with the UN pushing sustainable development goals, and with a lot of countries, including our Southeast Asian neighbors, announcing plans to push more for renewables. And we also saw significant decline in costs and increasing efficiencies in solar and wind power, which were getting more and more cost competitive relative to the thermal counterparts. Next slide, please. So in 2016, 2017, when we were still discerning the tea leaves, and while it was arguably still a tad early, AC Energy at the time made the strategic pivot from thermal to renewables. We redefined our playing field from the Philippine power market to the regional renewables market. That is, we decided that we didn't have to be a market leader in power in the Philippines, but we wanted to be a market leader in renewables across the region. We also decided to expand our business model from being primarily an investor in power assets to becoming a developer and operator of power assets. And we did so by acquiring and integrating platforms of our trusted partners, beginning with Bronze Oak Renewables in 2017, followed by Finma Energy in 2019, and just most recently, UPC Renewables Australia and Philippines in 2021. So now the running joke among our partners is who's next to be acquired and integrated. The last 5 years has been quite transformational, with our renewables business growing 46 times from around 70 megawatts in 2016 to where we are today, which is at around 3,300 megawatts, and already accounting, as Coco mentioned, for vast majority of our portfolio. Next slide, please. Today, our listed company, ASEN, is a leading renewables platform in the region with approximately 3,800 megawatts of capacity. Close to 90% or 3,300 megawatts of this capacity comes from renewable sources. And about 40% of this capacity is in the Philippines, which remains our core market, while 60% comes from international markets, including Indonesia, Vietnam, India, and Australia. We believe that our geographic diversification expands our business potential and ability to scale our renewables investments. We also have a significant renewables pipeline totaling over 18,000 megawatts across the region. And this puts ACEN in a strong position to realize our aspiration of becoming the largest renewables platform in Southeast Asia and achieve our goal of surpassing 5,000 megawatts by 2025. We actually hope and expect to achieve this goal earlier than 2025, and therefore in the next 6 months or so, we will be defining and communicating our 2030 aspirations to our stakeholders. Next slide, please. So as the company pivoted to renewables, we made a conscious choice to undertake a holistic approach to sustainability and to leverage as well the flourishing green bond market. And to date, we have raised a total of $1.6 billion of green bonds to support our aggressive renewables expansion. Our maiden green bond in 2019 was anchored by both ADB and IFC. And this actually also gave us the opportunity to create an environment and social policy and an E&S management system that is aligned with global standards. And this has also definitely helped shape a stronger ESG culture within the company. Next slide, please. And alongside with our parent or grandparent, parent Ayala Corp, ACEN has committed to net zero by 2050. And in line with this commitment, ACEN will transition its generation portfolio to 100% renewable energy by 2025. ACEN is also working towards an early retirement of its SLTech coal plant by 2040. This is 15 years earlier than its technical life. And we will adopt the just energy transition principles, where we will work to transition SLTech to cleaner technology and ensure the successful transition of the employees and communities that the company serves. Next slide. In summary, we're really quite excited for ACEN to be at the forefront of the energy transition with sustainability at our very core. And in fact, the recent challenges in the global energy market, particularly the tight supply situation and elevated fuel prices exacerbated by the Russia-Ukraine conflict, can only accelerate the energy transition, arguably in a similar fashion as how COVID-19 accelerated digitalization. Clearly, there is a lot of volatility, uncertainty, and opportunity that lies ahead of us. And I would be more than happy to expound on any of these issues in our discussion this morning. Meanwhile, I'm pleased to pass on the stage to our keynote speaker this morning. Let's all welcome BCG's Ming Teck Kong. Thank you so much.
Thank you, Eric. What an inspiring introduction and opening. And thank you, Coco, and also to the Makati Business Club for having me. Hopefully, yes, I see the slides, they've come up. Great. So what I'd like to do over the next 10 minutes is really, first of all, set the scene, maybe zoom out for a start to look at the big picture, and then talk about the how-to around ESG. So, zooming out a little, and kind of Eric started us on a good note. Companies clearly have to deliver value to their shareholders, but there has been kind of a movement over the last, I would say, decade for them to actually create broader benefits. And in the energy space, that has been percolating for the last 7-8 years, but this has been a broader trend, and it's really come to the fore. And I think just to ground in the context, which has also been shared by some of my previous BCG colleagues, in case any of you missed those sessions, ESG, environment, kind of societal governance management has become something of a source for value creation, and something that actually companies should really think about doing. And there are 7 reasons, and you can read here. It's easier when you're looking to recruit talent. There are new markets and businesses. Eric discussed renewables. That has really kind of come to the fore. There is occasionally higher profitability. We might discuss some of that later. Regulatory risk, it allows you to manage it. Capital, green bonds, new sources of capital, investors wanting to invest in you sustainably, and actually valuation premiums for companies that are strong on ESG. So there is a lot of the reasons why ESG today for different companies. Now, the question is, I think, how to, and for every company, it's easy, as Eric said, to establish a vision or an ambition around ESG. But what I wanted to do today is, beyond some vision or ambition, is really, just walk us through some of those building blocks around the how-to. And I think once you move beyond vision and ambition, there's a question of what do you focus on. And number 2 on this page, materiality, is really important, because this actually will vary per company, depending on what type of business you're in or businesses you're in, and will also vary depending on the stakeholder environment in which you operate in. So, understanding what to focus on is really important. Then, you'll get specific measures and initiatives coming out of that, the middle of the page, that's, relevant for your company. But then you've got to build essentially a bit of an operating system or operating model, if you want to call it, on the right-hand side, to really manage that and finally report and engage on that. So I just wanted to walk through a few of these blocks because I thought they were, somewhat interesting. So materiality, kind of broadly defined as what is important, what is of high importance to stakeholders and of relevance to your long-term business success. So when you're high on both of those 2 dimensions, it's material. And on this page, you see an example of a company that's actually quite a high carbon emitter with a sizable kind of operating footprint in terms of people. And inside their particular assessment, what you'll see is things like addressing climate change, their environmental footprint, but also, on the social side, their employees, their health and safety are quite material. So this is very specific to this company, and it will be different for different companies. For instance, if you're a digital bank, things which are low materiality on this page might actually be high for you. So cybersecurity, for instance, if you're kind of doing digital banking, it's probably a high materiality topic that you've got to handle. So choosing what ESG means for you, I think, is super important. And from here, you can look to develop specific initiatives. In this case, this company kind of decided to go for low carbon operations, look at efficiencies, renewable power, using better heat. In terms of their employees, they went into upgrading their HSSE, health, safety, security, and environment systems in order to really tackle the issues which were relevant to them. And they did so by really doing it with putting in place a operating model that was robust. And on the slide you'll see different elements, from having strategy, ambition, to measures that are being taken, and kind of execution of those measures and communication of those measures. But when you set these things up, I think some of the things that we've seen is this, in some ways, is something which you as kind of leaders in the business community must take on from the top. So company leadership actually needs to push this and actually steer it into different parts of the business. There's also elements around collaboration inside the setup of these models, ensuring that you get the right disciplines involved, technical disciplines, delineating, for instance, what does legal do, what does your HSE department do versus what does your ESG types of group do. But I think importantly, it's also important to think about kind of a central unit for monitoring kind of execution of an ESG strategy and embedding it into the operations to actually make these successful when we look at companies that are successful overall. Now, one element that I've spoken about is monitoring, and I think monitoring is quite closely linked to reporting. I think there is, interestingly, ESG is something which has a reporting element to it. And on this page, there are a couple of practices that we see successful companies do well. They have, adherence to frameworks, be it, GRI or CDP for carbon. They engage the ecosystem and not just raters, right? Like MSCI or Sustainalytics. There is a bunch of raters out there, but going beyond, even talking to banks, and that can even investors, that can even help them get ideas around, for instance, how to structure things or how to push things on. And they actively communicate, and we see really good examples where people are multi-channel. They have reports, they have websites, they have conventions where they bring these things together. They have specific interactions to really ensure that that system is working externally as well as internally, where they run it through kind of various committees inside the company, all the way to leadership and even board to ensure that you're progressing against an ESG strategy. So ESG, I think, is actually quite has become quite an important topic for most companies. And I, in that spirit, I will leave us with one closing thought, because I do want to try to keep to 10 minutes, which is that it actually presents a lot of opportunities as well. I think with some of the shifts that are happening, say in technologies and in climate and energy, all kinds of new things will emerge, and I think that some of us in this virtual room will have the opportunity to explore that and also grow and expand to new businesses. So it's something which has become important, and it's also an opportunity for us all. So let me, I think I'm at 10 minutes, so hopefully right on time.
Thank you very much, Ming Teck. We're all really looking forward to today's discussions. We're going to start first with Eric and Ming Teck, and then after about 15 minutes of that, we'll turn to our audience. Let me remind the audience again, if you have any questions, please post them in the chat box as early as now, and we'll get to them as soon as in about 15 minutes or so. Please type them in the chat box. And in the meantime, I'm going to turn over to Eric and Ming Teck. Eric?
Thanks so much, Coco and Ming Teck. Thank you, Ming Teck, for your insightful presentation. I now have the pleasure to be the one asking the questions.
Sure.
First of all, I want to pick up on this notion of materiality, which I think is a very important point and could be challenging for companies, including companies like us, as ESG deals with so many metrics. Right, and it's like almost boiling the ocean. And to your point, it would be good to prioritize a critical few and so forth. Also, the other dimension is arguably the most popular or sexy metric these days is GHG emissions. It's front and center, very measurable and actionable and so forth. I just want to dwell further in your thoughts on the S and the G aspects of ESG. As social and governance have several elements to it, can you highlight some of the more meaningful metrics in S and G that are important to stakeholders? I realize it may differ by sectors or by company, but based on your observation on certain key industries. And just related to that, if you can elaborate further on sort of the journey or the approach on how companies can best prioritize which areas or metrics to improve on? Just to provide a little bit of color would be helpful. Thank you.
Absolutely, Eric. Let me start with G. I think, in G, if I were on governance, if there were maybe two areas where I would see pretty classical metrics, would be things around, corporate ethics and gender kind of equality. And, typical metrics here that people look at is, for instance, the percentage of independent and non-exec board members in the structures. I think it's relatively straightforward. On gender equality, it's percentage of women on the board, in leadership, and management roles, and of course there are broader metrics as well. So I think these are pretty, if you like, straightforward kind of metrics that we probably deal with every day inside businesses. The kind of societal dimension of the ESG is an interesting one, because I think this is a little bit linked to footprint. If I were to pick a few, I think that health and safety is always something important, especially when you've got large numbers of employees. And people typically would look for things like injury rates or fatalities, quite straightforward as metrics. Community is important as well in the societal aspect. And there are, people will report different things, but kind of annual spend or annual contributions in this space may be scaled relative to revenue, for instance, could be quite an interesting, simple metric in this space that people focus on. Internally, within the societal aspect, there are things like, employee training, number of training hours, R&D kind of dollars, invested, that people also measure. So, all of these are, I would say, relatively straightforward metrics in both the S and G. So, what I take away, and you're right, it's not boiling the ocean, but it's what I call the typical kind of multi-dimensional managerial challenges that leaders in any company actually have, that you're not managing just against GHG. Of course, if you're a major emitter, then absolutely it's probably the most critical one. But for most businesses, it's probably a number of dimensions to manage against, and hence you'll probably look at 6 to 10 metrics, which are already probably also part of your existing management scorecard. So I think that's the good news when it comes to looking at these.
Right. No, thanks a lot, Ming Teck. Now, I guess just a related question, and it may be more applicable for listed companies that are rated by these rating agencies, whether it's MSCI, Dow Jones, Sustainalytics, and so forth. We're going through that experience as ASEN. We are beginning to get those ratings. And one of the insights is there is seemingly a gap between what the rating agencies see. And therefore, we think that our rating should be higher than what it actually is. And sometimes it's a matter of just using the proper channels or communicating more effectively our internal policies or metrics already. So I don't know if that's been the experience with some of your clients as well. But would be good to hear your thoughts in that regard. It plays to your point on using the different channels more effectively. And then how about applying this to unlisted companies where the discipline is good, but there's no forcing mechanism, if you like. So how can unlisted or smaller companies stay true to upping their game in terms of ESG without the forcing mechanism of these rating agencies having to rate them?
So I think this links back, Eric, to some of my opening sharing that there is a need for kind of leadership top down to drive this. But if we say, fine, there is that interest, then how do you actually, focus how a smaller company or a private company would look at this? And I think it's really linked to, these different dimensions. If you take inside conducting a materiality assessment, so which of these factors that we've been discussing in E, S, or G actually matter the most for a particular company, then choosing for a given measure, say community relations or HSE, what your posture should really be. Do you want to comply with minimum standards here? Do you want to be competitive against both listed and unlisted companies in your sector, or do you really want to lead in that space? So choosing a level of ambition, understanding what that means, and
did we lose Ming Teck?
Yeah, I think we lost
Okay.
Ming Teck.
While we're waiting for that, maybe Eric, I'll ask you a couple of questions. I'll take this opportunity to ask you a couple of questions. I noticed when you're talking about how you grew, especially after the first 1,000 megawatts, there's a lot of acquisitions. Just roughly, I suppose I can wake you up at 3 a.m. and you'd know the answer. Has most of your growth after that been acquisitions or organic?
No, it's actually still mostly organic or greenfield development, Coco. It's about 80-20. If you look at our whole megawatts, it's 80% of that was through greenfield development projects. But our acquisitions were strategic in nature. They may sound a handful, but it's really more of a platform acquisition. So we integrated them, and it's not easy, right? Because we've become experts already in terms of integrating these companies, and it's not easy to integrate development platforms because they're a very different animal than your classic corporate. So we're very careful because once you integrate them in a big corporate fashion, you will lose the entrepreneurship and the differentiation of a developer. So I think I'd like to believe that we've managed that quite well over the past 5 years or so. So
just
I think it's also a function of our ability to work hand in hand with developers from the very beginning, because we had no choice, frankly speaking, given our zero experience in power, right? So I think that already trained us in terms of how to treat other organizations with all the respect and be more enabling as opposed to domineering.
So it's just 20%, but I guess they were all headline grabbing because those guys were kind of pioneers in this field.
And exactly. Exactly.
Right. You mentioned that you're going to get to 100% renewable. Sorry, you're going to get net zero by 2050.
Yes.
For a company that says it is a renewable energy company and focus on that, doesn't 2050 sound far away?
Yes, it does, but there's quite a bit of nuance there. We don't want to overpromise at this point, but it's a little bit of a technicality. If net zero means, the classic definition of net zero is your net zero on all scopes, scope 1, scope 2, scope 3, right? Scope 1, for those who are not that familiar yet, is the direct emissions that you produce, like power plants, right? That's our scope 1. Scope 2 is effectively the electricity that you purchase. So when we purchase for our head office building the electricity, those emissions are our scope 2. It's very small from our point of view. And then scope 3 is the hard to address, because this is in your supply chain. So when we buy our wind turbines or solar panels and so forth, the emissions that are, or when we buy power, for example, because right now renewables cannot stand alone. We still need to complement this with other sources of electricity. Otherwise, our customers will not say, we cannot say to customers, bahala na kayo, if the wind is not blowing or the sun is not shining, you buy your own power. Cannot. We need to give them firm power. And therefore, we need to still complement these with other sources of energy, including coal or thermal generation or buying from the spot market, even if we don't technically own them. So when we say we're going to 100% renewables, it's really on generation. So it's scope 1 and arguably scope 2. But we cannot, it's too early to go net zero even on scope 3, right? It's just not feasible at this point yet. But by 2050, yes, if we can improve on that timing, so much the better. We will do so, but we need to see more proof on the viability of new technologies such as battery storage to really step in and replace the need for thermal capacities. That's the reason why it's 2050.
I'm just saying because I doubt if either of us are going to be around by 2050. So it's a nice long-term goal. Michelle, please just tell me if Ming Teck comes back on, because I'll just continue with Eric and the audience until then. Okay, Michelle?
Yeah, sure, Coco.
Thanks very much. Eric, actually the original topic for this session was about impact on the communities that you operate in. And these are, I mean, your projects are huge projects that affect communities, usually further out from the cities. How do you look at that issue, and how do you try to address the kinds of impacts that these create? As you shift from thermal to renewable, it seems cleaner, but it has its own different kinds of effects, right?
Yeah, definitely, Kaka. I think thanks for asking that question, and it's also great that I have the proper background, virtual background for that.
I noticed.
Yes, this is what you're seeing in this virtual background is our Alaminos solar storage project that is integrated with Ayala Land's carbon forest project. So you see the nice carbon forest hugging the solar and the storage. No? So we call this the sustainability hub or the eco hub, no? Because it is more than just a solar and storage project. We make sure that we integrate the ESG elements, that we integrate with our community. So for example, some interesting elements in this sustainability hub is, number one, we use the principle of circular economy, where we actually recycled the plastics used in our solar panels to become eco bricks. And that's what we use to build the physical structures, the building, and so forth. So there's a waste recycling program, and even after the construction of the plant, we will continue to do waste recycling, waste management in the community, because it's already jump-started by that eco brick recycling. So we integrated with the community to make sure that they continue that track of waste management and recycling to the broader community. So again, it's got an impact on the environment and also provide livelihood and so forth. We're also setting up a education center, some sort of a museum of sorts, so that we can make this educational and invite students, business leaders, regulators, partners to see for themselves the new technologies that we are employing in this site, and also have that the visitor center that will act as an educational center as well. No, so, and then of course you've got the carbon forest element, where we encourage reforestation and forest protection. And this is a template. We have a similar application in our conservation estate in Ilocos, where there is a more, in fact, a diverse biodiversity element. So we take care of the turtles, the birds, the wildlife there. So it's a very rich and also agroforestry, where we train the local residents on how to do agroforestry as well. So there's a lot of community engagement. So it's not just about building and producing clean energy. That's core, definitely. But as I mentioned in my earlier remarks, we want to do a holistic approach that includes these different elements of biodiversity, circular economy, reforestation, community engagement, and the like.
Thanks, Eric. I see Ming Teck's back.
Yes.
I'll ask Ming Teck the same question I asked you, Eric, and then I'll give it back to you before we return to the audience. And there are already questions from the audience. Ming Teck, the question I just asked Eric before you came in was to talk about the impacts that that companies have, in his case, obviously an energy company, on the communities around them, and how to make a positive impact there, certainly to try to not make or to try to limit the negative impact. Could you tell us a little bit about that when you engage with your clients? How do you approach that kind of issue? Ming Teck.
Look, I think it's an extremely important issue, and many of our clients have significant impacts on their communities. The clients in the energy sector and the industrial goods sector, that they have kind of large operations that impact communities in many ways. Now, from an ESG perspective, I talked about complying, competing, or leading in terms of a posture, on this topic, and really, we would look at, where are they, right? On different dimensions, what is the extent of their programs with the communities that they are working with, how established is that, how many people does it touch, what's the nature of those programs, how much economic contribution money do they actually put behind it, right? So are there contributions here? What's the level here that we're talking about? We can even benchmark it to understand. And then, more from a kind of a policy perspective, when we go up one level, what is the strength of those, those policies? What are they hoping to do with it? So it's actually interesting. I would say that for many of our clients, because they've been operating quite a while inside their communities, these things are pretty well developed. Actually, that's a surprising thing. Many people have been doing this quite well, because it is in some ways, for some of these sectors, it's been a license to operate type of issue for the longest time before it became ESG. So many of them actually work on these things pretty well. So it's just, do they want to be competitive, or do they want to lead? So I think it's just a matter of posture. But those are some of the dimensions that we typically look at, and there are the specific measures will differ, on kind of location by location. What are the needs of individual communities and stuff? So this does vary, but actually it's from a top-down perspective, it's fairly important, and we see actually people quite engaged in these spaces.
Eric, if you have a couple more questions for Ming Teck before we turn to the audience, go ahead.
Sure. Yeah. Let me state the final two questions so we can take the audience questions thereafter.
Yep. Sure thing.
First, Ming Teck, the absolutely resonates with me the benefits of the strong ESG orientation, the benefits to attract employees, especially the younger ones. We can certainly feel that in the organization. Strong valuation, access to capital, and also the cost of capital in some respects. But one thing that I still do not feel yet is the margin premium that you mentioned. Is this, at least in this part of the world, people are not ready yet to pay. Customers, especially the B2B customers, are not ready to pay that green premium. They still expect green to be cheaper, or as at parity with non-green or generic electricity. So is this really more of, and then in addition to that, if you expect to hold suppliers to higher standards, lower carbon footprint, that comes also typically with a cost, right? So, and therefore your margin arguably can be eroded if you pay higher cost for more sustainable products. So is this, if you can enlighten my mind here, is this really more of a developed economy phenomenon, or as opposed to more in emerging markets, or do we need to look at this differently, or are we marketing this not the right way? Any insights would be helpful to achieve that ideal green premium or margin premium.
Yeah, it's a very difficult topic, the green premium topic. So several thoughts. First of all, green premium exists in developed economies. That's both in terms of what consumers want and what they buy, right? So what they say they want versus what they buy is always two different things. But we see that it comes together in developed economies. In developing economies, I would say it's much harder. In terms of people saying what they want, yes, I've seen research that says yes, they're the same like developed economies. Now, what they buy, more challenging. There are some notable exceptions, and I think that it will become more a matter of time. The notable exceptions I see is actually in new green products. So even in developing economies, we do see EVs, right? Kind of electric vehicles kind of start to take shape. So in new spaces, there is definitely some type of premium or willingness to spend in the market that has emerged. Granted, it is early adopters, people that, and this is a common charge laid against electric vehicles. It's a luxury good, but fine. It's your initial adopters, but there is some evidence there to suggest that. Beyond that, I would say that in the supply chain perspective, in developing economies, we've had to think about green also as, how do I say, a minimum standard in some senses to participate in more global economies. And the example that comes to mind here is, palm oil, where, due to kind of the focus of NGOs, they were able to squeeze the supply chain, and green actually part of that palm oil supply chain. So people had to adapt and adjust just to stay in business. So we can argue it's a cost of compliance versus a green premium, but there are, I think, from a supply chain perspective, some impacts here. Now, I do think it's actually a dialogue overall, this topic of green premiums, and it's a dialogue in the dimensions of a so-called just transition. Who pays? If the technology scales fast enough, we might have to pay less in the developing economy. So that those are definitely debates worth having. And I do think in the context of global supply chains, although the global supply chain is coming to a different configuration at the moment over the last year, but in I would say transnational supply chains, there is definitely a discussion around how do we think about greening of supply chains, and what investments actually are people willing to make into perhaps developing economies which originate parts of the supply chain to really ensure that it is green. Because our willingness, I would say, in developing economies to really pay for this is probably lower than that of developed economies.
Okay, thanks for the clarification and the insights there.
Long answer, but it's a complex topic.
Yes, it is very nuanced, and I feel better now that we're not missing on anything or misreading. Yeah. One last question. Sorry, Kaka, you're on mute, Kaka. I don't know if you're speaking to.
If anything else, Eric, we're glad you feel better.
Yeah. Exactly. Thank you.
Go ahead. Sorry.
Okay. One last question before I turn over to you, Coco, and I'm sure Ming Teck will appreciate this question, but I can guarantee the audience that this is not forced on me to ask to Ming Teck. But hopefully you will get more clients engagements because of this question, Ming Teck. So, in what way has BCG helped clients in the area of sustainability? I'm really interested to hear what are the typical pain points of your clients. when it comes to issues and challenges confronting them in the area of sustainability, just so we know how to ask also the right questions, because again, I want to make sure that we're not missing out on anything big. So would be interested to hear what are those burning issues typically, without of course naming names, but if you could give us a flavor on what you.
So let me just make a few comments, and you'll probably get a sense. I think in ESG and sustainability, our client base is very broad. Everything from I would say, we were a partner to COP, the COP process. We've helped countries with, kind of decarbonization plans. But at the company level, I would say that it's quite an important topic at this point in time. I would say people are looking for, across sectors, two types of roadmaps. One is really around carbon decarbonization, and these are for, I would say, the heavy emission industries, right? So energy, cement, even consumer goods, right? They're thinking about their supply chains, transport logistics companies. They're all saying, okay, how do we deal with carbon as a topic? And then very frequently, or maybe separately, they say, actually, no, let's use this opportunity to think about ESG, as a kind of a roadmap. Where do we go with that? So sometimes it starts in one, goes to the other. Sometimes it's just ESG, but essentially with a heavy carbon bias, because that's, I think, risen in the thinking of leaders. So I would say that, a little bit, some of the pictures I showed around strategy, materiality, looking at initiatives, the operating model reporting. Those are the typical topics that we deal with in that type of work. There is a separate and, in my view, very interesting other area of work that we do linked to all of this. People are saying, what types of new businesses can we build? So are there new carbon-based businesses that we can build? I was talking with a client where, we're helping them build kind of a business which, enables people to understand what scope 3 emissions they have. So that's actually a tricky thing. It's a tricky thing, understanding what emissions there are in your supply chain. So it's actually a new business opportunity, or helping clients build, we helped someone build a new actually a new car. It was an EV. So there are actually lots of interesting kind of new business builds that I think are out there that goes alongside the ESG topic. So I tried to hint at it in my closing slide that there are new opportunities, but they actually do exist. So I think it's quite an exciting space in that sense.
Great, fantastic. Thanks a lot, Ming Teck. Over to you, Coco.
Eric, Ming Teck, thank you so much. We have a bunch of questions already. One was sent in earlier. There's a DM question to me, and there's some that I think all of you see in the chat box. For the one that was sent in earlier, could I turn to my colleague Reina to read it? Reina?
Yes, good morning. Well, this question is coming from Greg Mabago from UANP, who is actually joining us today, but he's driving. So he asked if I can ask the question on his behalf. And the question is it feasible for the Philippines to have energy futures for a more market-powered energy trading? And will wind or solar power sources replace traditional energy sources within 5 to 10 years in a significant way?
Happy to take that question, Reina. Thanks, Greg. Proud to be an alumnus of UANP as well. So on the first question, I really wish we had a futures market. We're unfortunately not as sophisticated as Australia, for example, has a futures market. But I think even before we get there, we should just get the basics done first. We have the spot market, which is a great start, but we do not have a reserve market yet. And I think that's one key priority that needs to be addressed by our government and regulators so that we have a proper functioning market with the right price signaling for the new build of power plants, especially Reserve market is important because it will encourage building of ancillary capacity, especially battery storage. I will always, and this is related to your second question, which is whether wind and solar will obsolete or take over from thermal capacity. I think a lot will depend for the ability of battery storage to scale up, and there's a lot of limitations still. We need to update our laws and regulations. Now that we have an operating facility, we can see already a lot of gaps in our existing regulations. I'm not going to bore you with the details now, but happy to do so in future occasions. That needs to be unlocked because the grid is limited, and the intermittency of solar and wind will not be enough or appropriate to replace thermal because we need it to be reliable. And for solar and wind to be reliable and dispatchable, meaning to say it's there when you need it, you need to store it first. And energy storage is still expensive at this stage, although again, the elevated fossil fuel price will accelerate the parity of battery storage. Although having said that, the pace of decline in the cost of battery storage and solar panels for that matter, and wind turbines because of the rising commodity cost has already either slowed down or temporarily reversed. We're seeing some increase in solar panel, wind turbine, and battery storage prices, albeit at a slower pace of increase versus fossil fuel price. So I think there's still an opportunity for battery storage and renewables to close that gap. My crystal ball says it's going to take decades, not years, for thermal to be obsolete. I think we will still need gas as an interim transition fuel, especially in a country like the Philippines. It will replace coal because coal is already, there's already a ban or a moratorium on coal. So I think for base load, we'll need to resort more on gas. And then I think renewables and storage will replace gas from a peaking or mid-merit, daytime usage or peak usage power. So I think it's going to take time. It's not going to happen overnight. So I don't know, Ming Teck, if you have further views on that. Yeah.
Yeah, Ming Teck, I wanted to ask along that line, what role do, whether it's futures markets or other financial markets, play in advancing these environmental advocacies and environmental projects?
I think they play not just markets, but actually government support plays a huge role in really advancing kind of the energy transition for any country. So I think, having a market that incents and supports kind of storage to buffer intermittent power generation from solar and wind, that's an absolute must. I think having government support that also encourages kind of the transition from coal to gas and actually ultimately gas to something else, potentially hydrogen or nuclear that might actually come back, is also important in the context of looking at long-term decarbonization in a country. Now, not every country needs to be at the forefront of that, but we need those types of policy supports. And we've just been talking about electricity. It applies beyond electricity, these supports. There needs also to be government's appropriate regulation on things like building energy efficiency. That's a huge lever, or transportation, and how that rolls out in terms of electrification of light fleets or using alternative fuels for heavier transport, be it on road, water or air. So I think government has a huge role to play. This is challenging for us in some developing economies because of either stability of government or the foresight. And this is actually where also public sector, kind of the private sector, does have a role to play to at least try to provide some support, maybe working together to actually help a particular country put the relevant supports in place.
Coco, if I may,
yes, please go ahead.
In addition to the reserve market that I mentioned, I think the carbon market, or at least in the case of the Philippines, the renewable energy market is also important, even before we talk about a futures market, which is undoubtedly more sophisticated. So the lower hanging fruit, in my mind, at least in the context of the Philippines, is to get the reserve market going, as well as the renewable energy market. The renewable energy market is nothing more than the ability to trade the green attributes of the renewable energy plants, because and in compliance with the renewable portfolio standards, because there's already a renewable energy law that mandates all customers, all utilities and retail electricity suppliers to buy a certain percentage of their electricity needs from renewable energy. And they have to prove that with the green certificates, the renewable energy certificate, the RECs. And these RECs can be traded, should be traded in a renewable energy market. That market does not exist yet. We need to get that going to encourage more renewable plants to be built as well. So we need these market mechanisms in place to really encourage more investments. Singapore, for example, is already putting together the carbon market, which I think is targeted towards voluntary carbon credits. But I think it's one of the more powerful trends, as well as more companies commit to net zero, while the companies will change the way they operate to reduce carbon emissions. There will be hard to abate emissions, and therefore they will have to resort to offsets or carbon market. That's where the carbon market becomes very important. So to have that market going, and to have an SGX or Singapore exchange to be pushing that, I think is a good thing, because we need more transparency and the assurance that these carbon credits are actually genuine and devoid of greenwashing and so forth. So I think these are some of the mechanisms, market mechanisms, that are needed to push the green agenda.
MBC would love to help you and the other players advocate for those, beginning with those renewable certificates that you mentioned. There's a DM to me. I'm gonna call on that first, and then we'll call on Jaime and Brian and the others who have chimed in here. Chona Solano of ANZ, are you still on the call, and do you want to relay your question, or shall I read it? Chona Solano.
Hi, good morning.
Go ahead.
If you can then just share my query to Mr. Francia. Thank you very much.
Okay. The question from Chona, Eric, was for the Philippines, how do we address base load and demand for electricity if we are to rely heavily on renewable energy? You've talked around this already, Eric. But I guess when she's saying, how do you address base load and demand for electricity?
It is going to be very tough to rely on renewables for base load. And that is why I mentioned earlier that we would still need gas in the interim. Over the long term, I can see a path where renewables can really obsolete the need for thermal. But you need to believe that, number one, you need scale solar and wind, as well as supported by geothermal and hydro, right? But geothermal and hydro, while they may be good for baseload, especially geothermal, the big opportunities, the big assets in the Philippines have been already developed, and the additional ones are very hard to develop. They're either very far from the grid or fraught with indigenous people related issues, ancestral domain and so forth, or very far from the transmission line, or very expensive to develop. So the low-hanging fruit has been developed. So I think the opportunity lies really on wind and solar, including over time offshore wind and floating solar, because we also don't want to crowd out agriculture when we use land. Although the first phase, the first wave of solar and wind projects could still coexist with agriculture because we typically build on non-arable land anyway. But over time, as you scale up, you might bump into these issues already and may have to go offshore or use the water surface. But again, that notwithstanding, you would need to complement this with battery storage. Otherwise, you will be at the mercy of Mother Nature and intermittency. So it will take time for battery storage, but we believe that it will happen. I see that nuclear is also being raised in the chat box now. That is a more controversial issue. I think social acceptance and the perceived and realities of safety would be an issue for nuclear, in addition to the fact that it takes a long time to develop and build nuclear. So again, that's a whole kettle of fish altogether. But and then of course there's talk of green hydrogen as a possibility of firing up these thermal plants over time. But I think we are decades away from that. I think the green hydrogen applications will be more on industrial application. But for to power power generation plants, I think we have a long ways to go. So I think, in other words, I hope I'm wrong on this. I think it will take decades before we can see the obsolescence of coal and gas. We will need the next couple of decades for baseload need to be backed up by thermal.
Thanks very much, Eric. Ming Teck, would you have something to add to that?
I think I share that view. I think in the short term, you've got your existing base, you've got coal to gas, you've got the intermittent renewables coming in. I think the real question is probably the energy mix in the period 2030 to 2040 and 2040 to 2050 Philippines. And it's somewhat technology progress dependent on the battery side, but also on some of these other technologies. So I think there needs to be a dialogue around, for any given country, what are the bets you want to place, such that you have a good mix of baseload characteristics as well as intermittent characteristics in that kind of time period. But I think we've added, there's been quite a lot of color on this discussion, so I probably won't add any more to that right now.
Ming Teck, thank you so much. Chona, thanks for the question. Reina, do you want to call on the next questioner?
Yes, so the next question is actually directed to Eric. It's from Jaime Avila. Jaime, would you like to unmute and ask the question?
Yeah. Can you hear me?
Yes.
Yeah. Good
Yes,
morning.
go ahead.
Yeah. Eric. You mentioned about the sustainable bonds or green bonds issued by ASEAN. I just want to know more about the bonds. Basically, what is the attraction for a potential investor, and is there a secondary market for these bonds?
Sure, Jaime. A quick answer to your second question is yes, there is a secondary market. All our bonds are traded in the Singapore exchange, relatively liquid. So I think what we've noticed in the last 5 years is really a strong wave of ESG-oriented or sustainable investors, and the green bond market really just boomed or continues to flourish. There's literally hundreds of billions of dollars that are deployed in green investments, and these investors also rate the different types of investments. I think there's more liquidity than opportunity in terms of sustainable investments, and that's why we always get a very high degree of interest in our green bonds. They're typically 4 or 5 times oversubscribed, if not more. I'm told by one of the sustainable investors that they love our bonds because they view that as a dark green. Because there's, as you know, in the sustainable investing world, there's different shades of green. And ours is typically the dark green, where we really deploy the capital that we get from the investor to building renewable energy projects. It's as green as it gets, especially if you overlay or when you overlay all of these ESG components that I discussed earlier involving the community, minding the circularity, circular economy, and so forth. So it really makes it even a darker green. So they love it, and the demand has been strong thus far. Now, there's typically a question on whether do we get a tighter spread or a lower cost of borrowing because of being green. The typical answer of the bankers is no, not necessarily. It's just a label that everyone can be proud of and satisfies their sustainability standards. But in my view, it's hard. I would argue there may be some advantage because the way the pricing works is, at the end of the day, there's some subjectivity in pricing. If you, at the risk of going too detailed, there's a book building process and you see how much demand there is before you price, right? So you can arguably price tighter if you're confident that there's so much demand. And I think that, we do get a bigger demand because of the extra bump or the extra interest that you get from the sustainable-oriented investors. Again, hard to prove, hard to quantify, but at a minimum, you will get at par, but at best, because of the higher degree of interest and volume, you can venture to price your bonds a little bit tighter and therefore get a cost advantage.
Just follow-up question, if you don't mind. Why are the bonds not listed in the Philippine Dealing Exchange?
Oh, because they're US dollar denominated.
I see.
Yeah. So that's the other thing. I think the reason why we are the largest, as Coco mentioned, issuer in the Philippines for green bonds is because it's dollar denominated, and because we have a large 60% of our business is outside of the Philippines.
Correct.
Then we don't have too much of a foreign exchange issue. It will be more difficult if you're selling here in peso and then borrowing in dollars, then you'll be exposing yourself. Yeah.
Exactly. So thank you very much, Eric, and wish you all the best. Thanks to the sponsors. Yeah.
Thanks, Eric. I'll read a question from Brian King Kai of Converge ICT. I'll direct it first to Ming Teck, and then Eric, you can pick it up. The question really here is, and he's from Converge ICT, and he tells us in the chat box about what Converge has done in this area. His question is, how do we further embed sustainability in our culture? He had talked about their sustainability report, for example. We want to ensure that our employees embed sustainability in everything that they do. This is apart from those who are involved in the sustainability initiatives themselves. So how do you get all employees involved in this? Ming Teck first, and then Eric.
So I think when we look at sustainability in any company, I start with materiality. There will be different parts that are more relevant to your company, your organization. I think once you've identified those and you've got measures and initiatives that you're progressing again, it becomes actually just part of business. Then I think it's a matter of actually delivering on those things, discussing them, delivering on them, celebrating success, kind of running the business, if you like, against those dimensions in a way which is well. Now, clearly, if you're early in the journey, and it's only a smaller team, there is a communication, there is a kind of a building awareness, energy inside the organization to kind of get excited and then have things to do about it. But after a while, it actually just becomes part of business, kind of part of business practice. So I think it depends what your starting point is. But I think hopefully in the discussions today, it's clear that sustainability, some of it is new potentially, but a lot of it is good business practice as well, across different dimensions of the business. So it depends what your starting point on those different things are. But there probably are different stages depending on where you are in the journey.
Thanks,
Yeah, happy
Eric.
to chime in here, Coco. I think just taking a page from our experience in ASEN, the way we've and really we've started ramping up our sustainability culture just in the last 3 or 4 years, following our strategic pivot to renewables 5 years ago. But I think number one, yes, I agree with Ming Teck that sustainability culture should start from the top and try to get a bottoms up support as well. But we added another element, which is a forcing mechanism as well. In 2019, this positive forcing mechanism was when we went to the market and did our first green bond. We thought that there was an opportunity to really accelerate our sustainability culture by involving some of the multilaterals who set arguably global standards in ESG. So we asked ADB and IFC to anchor our green bond. So Converge, for example, could consider, as many other companies are considering, sustainability-linked bonds, which is the new thing that's been embraced by a lot of ESG-oriented investors, right? Where you set, it's a good forcing mechanism because it forces you to set certain metrics or goals that's linked to your financing, right? And then you can also get potentially anchor investors that will require, the forcing mechanism here is these multilaterals required us to develop explicitly our environmental and social policy, our ENS policy, as well as an ESMS, the environmental and social management system, to make sure that we have it systematized in terms of how we do our day-to-day business to Ming Teck's very point. No, but you sort of crystallize that in the form of an explicit policy and systems and structure, right? So it becomes some sort of a forcing mechanism for the organization to embrace it. It's not easy. We've seen resistance, organizational resistance. Anything that has to do with change will be met with resistance because sometimes there's a tendency to, there's a learning curve, right? So more reporting, more steps, and so forth. So we want to make sure that we play the right balance in terms of people not just complying, but committing. So you also need to win the hearts and minds of people in the organization. And sometimes you need to do something that people can be proud of, whether it's, oh, we issued this very successful sustainability bond, or we have this metric, in our case, renewables, we're growing so big across the region. You celebrate those things, those goals that are related to sustainability to win the hearts and minds of your people as well. So yeah, it's a fascinating but not an easy journey, but hopefully you will have success in your own journey.
Thanks, Eric. Since we're running out of time, Reina and I will just read the questions. Reina, could you take the next one?
Yeah, sure. So the next one is from Jermaine Reyes of Synergy. And her question is quite similar to what we just previously covered. And it's more focused, though, on customers, how customers are also sensitized now to sustainability efforts. So her question is more on how can you marry both sustainability programs and convincing CEOs, because at this point, she mentioned that CEOs look for a return on investment. So how do you think can this expectation be bridged between a CEO and marketing? So yeah, she's asking basically what are your thoughts on this? Maybe we can ask Eric to answer this question first, and then follow it up with Ming Teck.
Yeah, I'll address that question with actual experience. We're very fortunate that part of the renewable energy law, for example, already incorporates the green energy option program, where if you are a smaller customer, like 100 kilowatt customer, you can actually purchase renewable energy. Because if you're purchasing generic energy, you have to be 500 kilowatts or higher. But the law differentiates that smaller customers can already have the power of choice. You don't have to buy from your utility. So that's a plug in this forum as well, that for those of you who are decision makers in buying electricity, if you're 100 kilowatts or higher, you can already purchase directly from any of these retail electricity suppliers. So we're fortunate to have that position. And again, to the extent that you can price your product at the same rate, doesn't have to be a premium to what you're paying your utility. It's an easy sell to a CEO. Even if you say, okay, we'll keep you whole on what you're buying now from the grid, except that this will be green, so you're doing something impactful. I think it's a significant value proposition. And depending on the competition, and hence my earlier question with Ming Teck, rather than pricing it at a premium to their existing electricity, you typically still have to price it at a discount because there's stiff competition among these players. But it's good. Competition is good for customers. So I think this is a classic case of you can have your cake and eat it too. Have something competitive in terms of offer and be green as well. But it's going to be challenging as electricity rates go up over time because of the fossil fuel prices. But anyway, that's been our experience. But hopefully, Ming Teck can provide a much broader view across different sectors.
Yep, great. Thanks, Eric.
Maybe just to quickly add, I think that sustainability, the nature of sustainability ROI is multidimensional. For a CEO type conversation, it can be about recruiting. You get access to more people in your company. If you have a strong sustainability kind of practice in your company. It could be that you have new products and services, especially consumer facing, linked to that. I think that is another add beyond your existing business. And we've talked a lot about financing and potentially even valuation. I think in Eric's sector, for instance, there is actually green companies do have valuation premiums. So the nature of the ROI can be very different depending on what sector and how you look at it. So my thoughts on this would be look quite broadly when you're looking for that so-called return inside the discussion on sustainability.
Great.
Thanks very much. Thanks very much, Ming Teck, Reina. There are three questions here that I'll either I'll ask quickly, or I'll try to answer, and Eric or Ming Teck, you can object if my answer is wrong. The first question is, what is the current exposure of financial enablers in the Philippines on supporting Philippine-led tech development on storage batteries? Question to you, Eric, is are companies here or investors investing in storage, developing storage?
Still quite limited, Coco. As I mentioned, we don't have the proper market mechanisms and regulatory policies yet, unfortunately. So there's only a few. We have one of the few battery storage. So we're still waiting for the proper market mechanisms and regulations to be updated, and for the cost to come down further.
Thanks very much. A question from Gabby Tomas about nuclear option being considered for base load. Unless you object, Eric, I think the answer is no right now, for you at least.
Yeah, I think I addressed this earlier already, Coco, the risks around nuclear.
Yes.
We need to address the safety component.
Right. Next question is from J.M. Avila from Converge ICT. And the question is about reaching out to the government about incentivizing the sustainability shift of companies, whether these are tax incentives or even PESA incentives. And I'll turn to Eric for this because he's on the ground here. Are there incentives that you and other players in the industry are pushing that the government adopt or enact?
I think it's less of incentives, because I think the renewable energy law, which is a big driver of sustainable investments, is already in place and has adequate incentives built in already. As I mentioned, it's more on the implementation of the rest of the law and the policies, those market mechanisms, as well as adjusting the parameters. Like, for example, there's a low regulatory cap in terms of the ability to sell energy. So with a very low cap, how can you justify an investment in battery storage, for example? To give you an example, in Philippines, the cap, you can only sell up to 32 pesos per kilowatt hour. In Australia, the cap is 600 pesos per kilowatt hour equivalent. So no wonder there's more battery storage investments in Australia than the Philippines because of that simple difference in regulatory cap, as an example. So it's more of those as opposed to incentives per se, but more on those policy decisions.
Thanks, Eric. Reina, next question.
I believe that's our last.
Yes, last from the audience. Go ahead, Reina. Oh, Reina, there's one more.
Hold on. Sorry. Oh, sorry. Yes. From Manny of Ayala Land. He's asking, could you give us an idea of the sustainability organizational structure in a company that is making strong headway towards carbonization, preferably in a real estate company, but not necessarily?
That's for Ming Teck.
Yes, that's for Ming Teck. Yes, that's correct.
Sure, and I think, so look, I think that there are, as in all organization questions on how you organize. And the typical decisions that people try to make are things such as, where does ambition and goal setting sit? Where's the strategy around this? Where does that sit? When you think about ESG activities, who's actually managing this, kind of running it? Where do the topic experts sit? Who's actually owning the activities itself? And how's communication organized, right? And for each of these, you've got questions around centralized kind of corporate units embedded within different sub businesses or business functions. Is it decentralized? And you can actually create something based on where you land on those answers. It really varies across companies and sectors. I would say that there are some probably common themes. To my earlier comments around line of sight from the top, you'll probably see that it's a topic spoken about at boards and associated subcommittees. That means that somewhere in an organization there will be a kind of management at the management level. There will be someone that's managing sustainability. I've seen it, for instance, under health and safety. People add an environment there. People sometimes have that as sustainability. I've seen sustainability under strategy, but this is just one component, right? The execution of this and the monitoring of this also has to be taken care of. So many different options. Hopefully, that has given some sense of the types of questions and some of the choices people make around organizing for it. It's a longer conversation and actually quite specific to the choices that any company, individual company has around some of these questions.
Thank you very much, Ming Teck, and thanks, Eric. In a moment, I'm going to ask both of you, what's the most exciting thing you see in the horizon? But before you answer that question, I'd like to thank all of our participants for this engaging discussion. And before we ask that last question, we'd like to ask everybody for your comments and your feedback on today's event. Please scan the QR code that we're flashing on your screens right now, or you may also click on the link that we are providing in the chat box. Please note that we may use your comments in our publications. And while our attendees are answering that question, I'd like to turn first to Eric and then to Ming Teck to share with us briefly what's the most exciting thing both of you see in the horizon. Eric first, and thank you very much, Eric, for doing this with us today.
Thanks so much, Coco, Ming Teck, and thanks to everyone for engaging in this very nuanced and exciting topic. From an Ayala Group perspective, definitely the two mega trends that we're most excited about are digitalization and decarbonization. We focused a lot on the second conversation today. even on a broader spectrum covering the other ESG dimensions. But definitely, these are powerful mega trends that are here to stay. These are multi-decade phenomena, and we're just very fortunate to be in the middle of the action and help create change and impact. So again, especially from the point of view of ASEN, we're happy to have pivoted to renewables and their sustainability core from 5 years ago. And we can really see a multi-decade transformation in this thing called energy transition. So very happy to be leading the charge in the renewables revolution, as we say, and glad to have shared these insights in this forum.
Thank you, Eric. Thank you very much, Eric. Ming Teck, could I ask you, when you look ahead, what is the most exciting thing in the horizon for you?
So, I tend to agree with Eric on the mega trends. Energy transition is a huge one. Digitalization continues to be a huge one. The thing which excites me most personally is actually the change in the dialogue away from just transition, be it more digital or lower carbon, to the concept of just transition. Because I think the understanding that we have to have benefit for society as well as planet is actually super important, I think, overall. So for me, the thing which excites me most is actually this the just transition. I think it's something that we can all I think get behind, and getting our many communities behind one thing is an achievement. So I think that's the one thing that really excites me going forward.
That's a whole new topic. That's a whole different topic or a related topic that's very close to our heart. We look forward maybe to inviting you or your colleagues to talk about that, Ming Teck. Thank you very much for doing this today. On that note, again, thank you to Eric and to Ming Teck, and thank you to our partners, BCG, and our media partner, Business Mirror. Thanks to all our members and guests for attending today, and for others for attending the others in the series. We really appreciate your presence. We would like to invite everyone to please follow us on Facebook to keep updated on our future activities and projects. Our page name is Makati Business Club. Good day to everybody. We look forward to seeing you again in our future events. Thank you and stay safe. Ming Teck, Eric, thank you so much.
Thank you, Eric.
Thank you very much.
Thank you, everyone.
Have a good day, everybody.
Thank you.
Thank you. Okay, let's go.
Hello, good morning. Congratulations for finishing the sustainability series with BCG. This is the last and final session, as you mentioned, Coco. Yeah. So for the benefit of DESA, I think this is the first time DESA is attending the post-mortem, or as what Coco always say, autopsy meeting. So DESA, we always do this right after every event or activity that we do. Basically, this is for us to discuss on the key takeaways, no, that we can do for the next or the succeeding events of MPC, something that we can improve on for our events and